Hello, everyone, and welcome to the big show. This is Investing with Confidence. As always, I am your host, Josh Lilquist, and we are happy to have you with us today. Today, I got a very, very special friend here. We call him the crypto wizard with the picture here, Mr. Merlin Rothfeld. Merlin, how the heck are you doing today? Twins. I mean, can we do with two Merlin Rothfelds? We're going to do something a little bit different here today, Merlin. I'm really glad to have you on the show. And you got a real busy schedule with your show going on. We'll talk about that a little bit later. But today we're going to talk 100% crypto. And, I've had I know you talk about this a lot on your show as well, but I've had a lot of people ask me, what is cryptocurrency? What is it for? Why is it here? So I kind of want you to dissect that a little bit. To start out, I just want you to give a little background on what cryptocurrency really is, and then we'll get into some more details on it. Got it. And they're using this for everywhere. I mean, real estate, the blockchain, right? Just go ahead. Dive in a little bit deeper on the blockchain and how that might be used. I know it's peer to peer, but is that kind of a way to eliminate, as you were talking about earlier, but as you eliminate fraud in a way for someone not getting paid for something? To manipulate. Yeah. No, to like the new person that's trying to get into it. I mean, a lot of our listeners, they trade stocks or options or futures or forex. Is that the same type of platforms you would go to find a Bitcoin, or can you just go onto a like a trade station? This isn't to be any pumping up any platform or anything, but where can people find it? Hmm. Got it. So I know you were watching some baseball this weekend, but you kind of just threw me a softball. You said some terminology, bread wallet. So is that where this is all stored? I mean, there's difference between hot wallets, cold wallets, and they have a private key. So get into that, but also explain, say if somebody has a platform, who owns that private key as well? Choose wisely. That's good. Yep. We got a piece of that. We we got a little piece of it there, real quick. Mm-hmm. Got it. Got it. So no, that was good. That was really good. So with the Nano Ledger you mentioned, that was one of the places you store it. Now, where can somebody find that? I mean, is it's not just a regular USB, is it? Got it. Got it. You know, we're having such a great show here. The good thing is we are recording this show separately because apparently you're on mute. Merlin, apparently they can't hear you, which is okay because we will be reposting this with some audio. I am recording this as well. So we're gonna just continue like we're all. It's all good. That's the good thing with live video is you never know what's gonna happen. All right, we'll just we'll keep playing with it. But so yeah, we'll repost this for the listeners. So just keep watching here. So the I want to get into the difference between proof of work and staking. So there's some new terminology for people. Let's start out with proof of work because I think that's what more people will understand, and then we'll get into staking. What is proof of work?
Process data. So with the Bitcoin network, they have a hashing function, and the computers are trying to solve a simple cryptographic puzzle. Whoever solves that puzzle first is rewarded for solving that block of data. They get paid by the network, and this right now it's 6.25 Bitcoin. So if I solve a block of data with my computer, I get paid 6.25 Bitcoin. plus any transaction fees which occurred during that block of time. And then that block gets uploaded to the chain and we all start again on the next block. Now, there are tens of thousands of computers all competing to solve this block of data, which makes it naturally decentralized. The more people in the network, the more decentralized that becomes, and it acts as a security mechanism. Now, I know most people are going, solves a puzzle? How difficult could it be?
What does that mean, right?
Yeah, I know. And that's where it gets really weird. It's basically a hashing function. It's a cryptographic puzzle. And it's kind of like a jigsaw puzzle, right? They're taking pieces and trying to make it fit, trying to make this string of numbers work. And I'm oversimplifying it because if we get too deep in it, your eyes are just going to roll back in your head and you're like, I don't get it. So basically with proof of work, all these computers are trying to solve a specific puzzle. When they do, they're rewarded. That block is solved, added to the chain, and they move on to the next one. The argument against proof of work is that it uses so much power, because if you and I are the only two people in the network right now, and you have, let's say, 1 terabyte of hashing power, and I have 1 terabyte of hashing power, we have a 50-50 chance of solving that block of data.
Okay.
But I'm going to look at that and go, well, I want to make sure I solve that block of data, so I'm going to buy another terahash. So I'm at 2 terahash, you're at 1. I now have a better probability. I'm 66% of solving the block, right? But I've now doubled my power consumption. Okay. You see that and you're like, well, shoot, I got to beat Merlin. You jump to 4 terahash. So now you're going to solve twice as many as I am. And all of a sudden you can see this escalating. And now you have warehouses the size of Costco with nothing but mining equipment in it, trying to solve these puzzles. So it does use a lot of power, but keep in mind, for those of you who say that Bitcoin has no intrinsic value, it's worth nothing, you're wrong. This is where the value comes from. Because if you think about it, there is a value to the mining of Bitcoin. It costs money to mine them. Therefore, it does actually have intrinsic value, just like gold, right? Gold has a value because it is scarce, right? And it's desirable, but it also takes a ton of money to extract it from the earth. Those mining rigs aren't free. The real mining equipment and explosions and dynamite, that's all passed on through the price of gold, just like Bitcoin now has intrinsic value there. So that's proof of work. Do you have any questions there before I dive deeper?
No, I like it. Let's keep going with the proof of stake then.
Okay, so the big argument that's been coming up is, Bitcoin's using way too much power. I think one of the numbers I read was that the amount of power consumption for Bitcoin last year was the same amount of power that Argentina uses an entire year. It's like, wow, that's tremendous. And I would agree that, yes, if we can find a better mechanism that still keeps the security and safety of the network, I'm all for it. So Ethereum is one that started out as proof of work. And they are right now in the process of moving to something called proof of stake, which is very different. All proof of stake does is say, we are now going to go out to the community. And if you stake Ethereum, so for example, if I was to take, I think right now the number is 32, you have to use 32 Ethereum to be a staker.
Okay.
What that allows you to do is you are now rewarded if you solve a block of data. But the only way you can solve a block of data is to have a stake in it. So let's say you've got 10 people and each person commits 1 Ethereum, right? So everyone's equal. Right there, every one of those 10 participants has a 10% chance of solving that block of data. If they solve it, they get a mining reward. So they'll get some Ethereum plus the fees for that block of data. And then same thing, it just moves to the next block and the next block and next block. Now, Ethereum's blocks are about 15 seconds. So it's much faster than the 10-minute that you saw for Bitcoin. Now, is this a safer system? Not necessarily, right? A proof of work is a safer system, but a proof of stake uses a lot less power consumption. So, you can make these arguments of which one's better. We'll have to wait. I mean, I still think that it's in such an infancy state. We'll have to wait a few years to see if there's any real issues with proof of stake. Proof of work is fairly proven at this point.
Yeah, and I was looking at a couple other things earlier about staking and stuff, but there's ways to, if you purchase or you buy one of them, I don't know which one you can do, but there's interest that you can collect on some of these, like an annual APR or something.
Yeah. So for example, and there's a lot of them out there. Kusama, one of that I have in particular is called Polkadot, and Polkadot, we talk later maybe about their project, but I own some of that, and basically I have it on an exchange. So I keep mine at Kraken. I could move it elsewhere, but Kraken has a really nice rate. And what I've done is I've taken those Polkadot tokens and I've committed them to the network. I basically said, I'm staking those and I'm essentially collecting a staking reward. And they've just averaged it out and say, I get 12% per year, and it's done 12% per year, but I get paid 2 times a week, every Tuesday and every Friday. And they reward you in the Polkadot token.
Okay.
So why not, right? I mean, you're making 12% rate of return on an asset that has been, appreciating very sharply. So you're getting two factors here. I'm getting extra Polkadot every 2 days, and I'm also gaining or subject to loss with the fluctuations of the underlying asset. And there's a lot of them out there.
Yeah, and that's to my knowledge, a little better of a APR or interest rate than at your bank, isn't it? Just a slightly.
Just like I think you get 0.1%. It's so funny. You could go a whole year in your checking and get save $100,000 in your checking account making 0.1% interest. You will make more money with like 5 Polkadot over a week than you will in your entire $100,000 account for a year. It's remarkable.
You look at it and like, what the heck just happened here? Thanks, but no thanks, right?
Yeah. I mean, but this is just, and this is why I'm definitely one of the ones waving the banner. And I've lost a couple of friends and viewers over the year because they think I'm a big fanboy, specifically for Bitcoin. Well, I am. I believe that what you're seeing right now is a fundamental change in the way that we are going to do business going forward. Imagine back into, I want everyone to think back into 1985. If I told you to send me an email, you wouldn't know what the hell I was talking about.
Yeah.
If I say, go check out Google, I got this great YouTube video you should check out, or go watch our stream live at 2 p.m. Then you go, what the hell are you talking about?
That's a fad, right?
It's a fad. Right now, the internet is so immersed in our way of life, it's inseparable. You cannot take these things out of our lives. Even when you go on vacation, you're like, oh, I'm getting away from it all. You're going to go to an internet cafe, check the news, check the sporting events, check your bank accounts, check your phone, make a call. We can't get away from it. And I personally think that in the next 10 years, this digital ecosystem will completely replace our physical ecosystem, meaning you will no longer have maybe not no longer have, but the power of somebody like a Merrill Lynch, a Charles Schwab, a Fidelity, E-Trade will go away. And you'll have things like Brickblog, Bet Tokens, Spice, Basket, Slice, Materium, Fetch, Swarm, Set, Harbor. I'm willing to bet that not one of your viewers knows one of those names.
I mean, a lot of those are brand new to me even.
And I don't mean to sound condescending. It's just they're such in their infancy that each one, those are just investing digital asset ecosystems, right? Those aren't even, you could break it down into, you've got digital payment systems, custodial services, exchanges. You'll have digital exchanges that are popping up like Coinbase, but far more robust. You have identity tokens, you have derivatives, so you can trade futures, options, all kinds of different assets on a digital market, not have to go through the CME or other exchanges. You have things like insurance, credit, lending, prediction markets, marketplaces. I mean, it's expanding ever so quickly because you remove these centralized characters and all of a sudden you retain more of your money.
Yeah. So with that being said, you mentioned the internet and email back in 85, 90, early 90s. Everybody's like, that's a fad, right?
Yeah.
So let's talk a little bit about probably one of your favorites, that Dogecoin that's out there. If that's what everybody's been saying about that. Let me hear what you have to say about that, because that's the same thing that we're hearing.
It is. So for Dogecoin and a lot of these other tiny little micro, I mean, I apologize for cursing in the air, but this is what they're called. They're just called shitcoins. That's the name of the industry is a shitcoin. So I'm not cursing. It's just the term they use. So Dogecoin was started out as a joke. It literally was a joke by these two guys. One guy used he was always doing memes, and some guy said, let's tokenize it. So they made this token, and it was designed to be a joke. Now you're looking at, I think, the $40 or $50 billion market cap right now. It's ridiculous. The question is it still a joke? And I have to backpedal a little bit, because I was one in the camp, like, I would never own Dogecoin. It was actually one of the first ones I bought because I was testing out a wallet, and that's what they had. But I dumped it, and I actually, in full disclosure, I do own Dogecoin right now.
So you
not because I necessarily, it's not that I don't I necessarily believe in it. It's just it's what's hot, So part of my portfolio is I have speculative investments. Now, I'm going to do two things. I'll go talk about Dogecoin, but I'm also going to talk in parallel about a company called Tron, which is another digital token. Dogecoin was started as a joke. Tron started as 100% plagiarism, right? They stole someone's white paper, which is basically an idea about the project. And they did a searcher in place, and anytime it had the other company's name, they just wrote Tron, and they copied this exact program and started their own token. So in my mind, shame on them, that's bad, blah, blah, blah. That said, over the next couple of years, they had billions of dollars. So if you're a guy or a gal and you create a fake token that you think is a joke, it was designed to be a scam, and all of a sudden you've got billions of dollars, you can now look at it from the perspective of, hey, you know what? I have billions of dollars. I could go buy myself $100 million office building. I could go out and I could find some of the brightest programmers and crypto minds in the world, pay them nice six-figure salaries. All of a sudden, my joke could potentially be rather legitimate.
Mm-hmm.
So, I gotta look at Dogecoin and things like Tron and say, while I thought that they were both jokes and scams to begin with, there is potential for them if they put their money where they feel they could grow that business. And could Dogecoin be the transactional currency? Could it be the one that we use in the stores? Well, the transaction time is much faster than Bitcoin. I think it's just a few seconds. Let me take it back. I think it's about a minute and a half, if I'm not mistaken, to settle a transaction. Well, if Bitcoin's 10 minutes, try buying a mocha latte at Starbucks and paying with Bitcoin. You're like, by the time you paid, the coffee's cold.
Yeah, it's a no-brainer.
But 1 or 2 minutes, maybe better. There's other ones that are better transactionally. But the point I'm making here is, what starts off as the black sheep may actually turn into the swan here if they put their money in the right places. It's all about how they utilize that capital, and are they going to continue to be a joke? Or what I feel now is happening with Dogecoin is they're looking at it going, oh, shoot, we may actually do something big here. Let's try to do it. So when you got Elon Musk pumping you nonstop, it also helps quite a bit.
Well, plus I think Mark Cuban apparently is taking it for Mavs games. He was just on Ellen, I think yesterday or today, and he was supposed to be talking about that as well. So it's mainstream. I mean, it's here to stay, I think. But I mean, that kind of leads into my next question too. Is like, as far as there's so many shit coins out there, like you said, there's so many cryptocurrencies out there. What could like they're not all going to stay. Who do you think will come off the top dog at the end?
That's a great question. I think if you are an investor, if you're a trader in it, who cares, right? It's kind of like saying stocks. Do you care if the company's going to make it the next year, next 20 years? I don't care if I'm an active
who's to stick around,
Right. And I think this is where you got to look at the projects, see what they're doing, what the goals and objectives are. I think for me personally, it breaks down into 3 categories. Category number 1 is going to be that store value, and that's going to be Bitcoin. Bitcoin will be digital gold. It's going to stay there. Number 2, it starts to go down into programmability. And I think that you're going to look at somebody like Ethereum. And Ethereum right now has thousands of different projects tied to their blockchain. So there is a codependency there. So that makes them, for me, my very solid number 2.
Doesn't that slow them down though? Is that a problem?
It does bog them down, but you know what, they've always got tons of money. So what they're doing is now is upgrading their system, because they didn't have the transactional capability to deal with all this at the beginning, right? Neither does Bitcoin. But you can evolve your algorithm. You can evolve the code and say, all right, we'll implement new things. They have sharding and all sorts of different technologies, which allow them to scale up. And if they can do that successfully, then they'll still be the top dog down the road. There's other competition. Neo, EOS is one of my personal favorites in that space that's competing directly with Ethereum. EOS can do probably a factor of 30x the transactions that Ethereum can. Much more, much faster, and it's free. There are other issues with it, but there's if we're looking from the programmability, I'm looking at EOS and I'm looking at Binance. Binance is really the one that is probably going to be added much more to my portfolio, just because CZ, the guy who runs Binance, he is 100% in the crypto world, and he is doing exchanges. He's got derivatives markets. He's blowing up his Binance.com. And for me, they have the transactional potential, they have the scalability potential, they have smart contract potential. So they have the potential to be the biggest of them all. But I still have a love for Bitcoin. Call me a purist.
Well, hey, if that's what's doing good for you and it's there to stay, I mean, why not, right? No. Yeah,
I mean, it's hard. This is another thing. I got a donkey of the day segment, which I don't want to call out, but one of my viewers has been posting nonstop on how Bitcoin is dead. It's dying. Oh, it sucks. It's going to crash. It's like, you know what? Since August, it's up 560%. And you're screaming at the top of your lungs that this thing is dead when it drops 38%. I will take that trade any day. Yeah. You give me something that moves 566% in how many months is that? August, September, October, November, December, January. In 8 months. 566%. But you're going to cry a little bit when it drops 38%. You just got to be able to deal with that volatility. I'll take that any day of the week.
Yeah.
I mean, if Bitcoin last week dropped 50%, I'd still be up exponentially huge on my Bitcoin holdings. But this is the type of thing you have to deal with the crypto space, is having these giant moves up and giant moves down. It's gut wrenching at times. But yeah, anybody who thinks that Bitcoin's dead because it dropped 38% just doesn't understand the marketplace.
You're exactly right. I mean, it doesn't matter. I mean, some people are, I think the term is hodling.
Yep.
Is that what they call them?
Totally.
And I mean, it doesn't matter. I mean, if you have that thought, it's going to continue to go up. Great. Continue to ride it.
Yeah.
One of the things I've always told myself here the past couple of years, because a couple of times it's kind of bit me in the butt. I was like, I wish I would have, I wish I could have, right? I'm going to start to invest just a little bit. Anytime you hear something that's a scam, that's not going to be around, you're an idiot. Because we all kind of said that. A lot of people did anyway when cryptocurrencies first came out.
Sure.
Now who's laughing, right? So,
it's funny. If you look at Eyal Shahar, who runs Online Trading Academy, if you look at how that whole company got started, it was basically off of an industry that everyone said was a scam. And I'll let me clarify. Direct access trading back in the late 90s, every institution out there, Merrill Lynch, JP Morgan, it was a scam. It's a scam. Don't direct access trade. Why? Because you were taking business away from them.
Yep.
Don't do that. It's dangerous. You're going to lose all your money. It's a scam. It's a scam. Now day trading is commonplace. Direct access trading is people don't even understand what they're using. They're using direct access trading. It's because it's been there. It wasn't a scam. It was just a new technology. Look at Jamie Dimon. I mean, there's your donkey of the day. And that jackass was on air saying, I will fire anybody at my company who trades Bitcoin. Now you've got Bitcoin managed funds. Way to go there, buddy. Who you firing? I don't think you're firing anybody. So yeah, anytime there's that fear that something's a scam, I mean, obviously go into it cautiously, approach it like it is a scam, but do your due diligence, do some research. And as soon as I pulled back the curtain and really dove into what the hell Bitcoin was, how it worked, I was like, oh, wow, this isn't a scam. I mean, this has the foundations to be revolutionary for our financial markets and the way that you and I do business, not just monetarily, but the way we transact everything. There's a huge potential change there.
Yep. And you should always go into an investment, only invest what you're willing to lose or what you're willing to risk, because if you go in as a gamble, it's 100% a gamble in anything that you do. So, I listen to your show from time to time, Merlin, Trader Merlin. I believe that comes on in about an hour. I know you're pretty busy here today.
I'll be on an hour, yeah.
Now, you've been talking a little about earlier about how coins are created and stuff like that. I just got to ask you, when's the Merlin coin coming?
It's funny. I've actually been working on it, but you have to know there's a language out there called Solidity, which is the native language to Ethereum. So I've been trying to teach myself some of this stuff, but I'm not a coder in any way, shape, or form. So I'm trying to do it from the raw way. I could go and pay someone to create one, but I like to get my hands dirty and see what am I doing, how am I writing all this stuff. So I don't know what it would be good for, but yeah, I will probably create a Trader Merlin coin here soon, just for the shits and giggles, have some fun with it. Why not? I mean, everybody else is doing it.
Hey, you never know. Someone might pump it up. You never know what's going to happen.
That's right. You never know. But mine would technically literally be a shit coin because it would serve no purpose other than be funny. But if I could find a way to make it have a utility or a value, which is what I'm thinking of doing, then I think that you might be onto something, and this is where a lot of these projects, you have to look at what is their value, what do they bring to our economy, what do they bring to the table with regards to expanding the digital universe. Do they fill a need? It's like if you have a product or service and it doesn't fill a need, then it's going to go away. It's trash. But if you do have something that fills a need, a void or something, a deficiency in the marketplace, then there could be great potential. And there are thousands of different products out there that some of which will be great. My assumption would be that the vast majority of them are just going to go the way of the dodo and no one will ever hear from them again. So you got to be careful where you put your money.
Yep. Appreciate the information here, Merlin. I know you got your show coming up here, gosh, in about an hour and 10 minutes. Trader Merlin on the Trader Merlin show. Where can people find you on Twitter? Is it at Trader Merlin?
Yep, Trader Merlin. I'm Trader Merlin on YouTube, Facebook, every social media is just Trader Merlin. Got it.
Appreciate you for coming on the show. Great crypto show. There you have it, everybody. Crypto with the Crypto Wizard. I'll see you soon, Merlin.
Thank you. Thanks for having me on, Josh.
All right. Thanks, everybody. We'll see you soon.